Hi folks, Nick here, recapping the day, March 26, 2015. A red day scoreboard-wise, but the Bulls have something to take away that's positive. In other words, I love to say this, for a bad day, it sure didn't feel as bad. Okay, the Dow closed down 0.23%, same for the SPX, little worse for the NASDAQ, just a little better for the small caps, RUT down 0.15%. So why is it not such a bad day? Because of this. Before the open, we had some confluence of headlines, bad headlines. This was yesterday, bad day, right? Meander, 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 and then we had a slew of bad headlines right there. First of all, we're told that the plane was crashed on purpose. Terrible, terrible act. Second of all, we had some Fed speak. And then we have issues in Yemen, bombarding going on by Saudi Arabia, and some, now Iran gets involved. So these are scary headlines. And the fact that we sold off to 2033 on the ES, these are the E-minis, S&P basically, and then we rallied into the open from there. So we cut our losses from 15 points down or so to a decent open. Scary, then bounced, and then we rose into a wedge. And then the wedge threatened to break out right here, led by who? The small caps. Look at that. Small caps says, come on, join me, everybody else. And nobody did. So they said, all right, we'll sell off then. They sold off. The wedge broke and closed weak. However, still better than the possible outcome had we continued the morning sadness. Now, the bad thing is that right here, all the indices were green. Everything was green. So the bears can take away, hey, I showed you a scary moment in the morning, and guess what? You went green, and I told you, nope, you're not going green, you're going to close red. So the bears also have a win today, for sure, not just on the scoreboard. Apple, what's with this? 120.8 before the open. Shenanigans, okay? Well, today you say, okay, it was up $1 almost, 90 cents. Really? Yeah, but look how close it is to yesterday's worst-case scenario, right here. Okay, somebody asked me, what's with this print in Apple before they open? What's this last night? What's this shenanigans? This is not shenanigans. Why? Because if I look this way, it was there in the morning. So these are late settlements of deals that happen here on a handshake, basically. You can picture it on the floor or somewhere. Big guys make a deal right here, and then they have to settle on it at the end of the day. Right? So this is not strange. This would be strange if there was no price like this yesterday. Like yesterday, if you remember, I told you, what's with Apple showing us 125 right here, right, in the morning. If I look back that day, there was no price around that time. Look at that. So there was no preconceived deal right there that could have perceived this. This is just the market makers push the button by mistake early. I'm convinced of it. I can't prove it, but this is my theory on it. Anyway, Apple had a chance to break down to here today, but it didn't after it was down to there. So decent salvation there. Priceline was saved by the bell. I'm convinced of it. Had it lost this level, we would have gone much further. Same with the SPX. Had we lost this level, we would have gone further. Same with the NASDAQ. That's the NQ minis. Same with the small caps. All right, so where do we stand? Tomorrow's Friday. Expiration days are always fun, right? So let's go look at the SPY. This is 6 months to show you candles. This is a long-standing trend. It did break in October. We pierced it a few times since then, but the corrections were nice. We touched it, and here we are. A candle, indecisive. They touched the bottom. Now what? Is this one of these or one of this? If it's one of this, there's a heck of a lot of falling to be done. That's why I delayed my entry point I announced today. Even though my entry point is right around here, so look how much safety I'm building. Those are the kind of trades I like. And the alternative would be up here to make it an iron condor. Why up here? Because I make room for this. I extend this up, and I make room for the worst case scenario. And if I do both at the same time, I'm well hedged right from the get-go, well balanced. So if I get one move down this way one day, this will gain, this will lose. I can close both for about the same price. If we crash, you can't do anything about that. Everybody loses money. But your loss will be less because you were hedged. Okay, so I'm not calling for a crash. I'm just telling you the possibilities. Volume, important to see that we had 2 negative days and 2 high volumes. So the selling is accelerating and gaining conviction, perhaps. Okay, that's the S&P. What about the NASDAQ? Is it the same story? Oh, yeah. And look at this. That's a trend that connects the worst case scenario of the October, the worst case scenario recently. Here we are. We kissed it today. Not a good candle. Following a hideous candle, which was a break of this rising broadening wedge. See that orange thing? And this about the target for that wedge, eyeball maybe a little more. But if it breaks this one, this comes pretty quickly, this area. 102 to 100 comes pretty quickly. So I'd want to be careful with that. If I want to take longs, I'd want to get down to here at least. And this is another level that falls behind. So if I want to go really long, like to May or June or July, I'd want to hide down here. If I'm going to go to April, maybe early May, maybe I can hide here with a credit put spread and make sure to go up there with a credit call spread. But here's the important point. So we've got this level. I also drew this one. We got this level. Why this? It was a roof until we broke out from it, and then it provided support, and then we broke out from it, and here we are at it again. So it's not a hard line. It's more of an area. Okay, I'm interested. Let me draw an area. I keep saying it. Right about here. That's an area of interest, okay? I want to see how we handle that area. Maybe a little higher, a little lower. It doesn't matter. So everything is coming to a point. It's important. Volume also building in a negative way. That's not good. You know, MACD crossing over, that's not good. Not a disaster. I wouldn't start shorts based on that, especially not down here. But if I have longs that are tight, I would start defending for sure. Small caps. We broke that rising wedge in a big way, and this is about the target for it. Volume not building. It's a little less than yesterday. That's at least good. But now we're back down below this one. However, we're still much higher than the recent roofs that we've had. So I'm not panicking. I want to see how this area holds up. This area was notorious magnet. Look at it. And then we finally busted out of it. Boing. Now, if we fall back into it, I think the bulls will be dejected. Okay? So these are the ranges. What do I do now? I don't have to do anything. I don't rush into anything. The reason why I didn't jump into the SPY trade I mentioned today is because of this line right there. I want to see the next tick. How is it going to handle the next 50 cents or dollar? Okay? There's always a trade to be had. If you miss one, you get the next one. Yeah, okay? All right. I have a whole bunch of stuff as far as individual tickers to tackle. But before that, we need to talk about the variables, okay? Now, the variables are almost always the same, and every once in a while, I will bring in a new one. Today, I'm bringing in political variables. The developments in the Middle East. These are political developments that have market implications. I'm not a political analyst, but I do know a few things about the Middle East. And it can get complicated really quickly, and it can be scary really quickly, okay? So I have to be watching for it. Now we've got talks, headlines that include Iran, Saudis, and they don't like each other. And then you include Yemen, which is in turmoil, and ISIS, which is pretty scary all by itself, and they're becoming legitimized. So in the sense where they're probably gaining support the longer they hang around. So all this is scary. It has market-moving implications, okay? And oil is it can be affected by that. And then the economy, the reports are coming in softer in the U.S., and that's not good. Luckily, they are getting better in Europe. So these are also on my radar. The dollar is strong again today, but even the markets don't know if they want a strong dollar or not. One day they like it, and the other day they don't like it. And case in point, similar, I should say, is the bonds. So one day they like the bonds, the other day they don't like the bonds. Today we had market downs, markets down, bonds down 1.5%. Okay, they broke the wedge, and now where do they stop? 127, 128. 2 days ago they were headed here, and then the bull run went over. Conversely, so one day the markets like it when they're red, and the other day they don't. So I can't depend on that anymore. I can just show you. Here we are. This is the 2% on the 10-year yield. It kissed it again, and now it wants to break out. The close above this green one maybe would have it stretch up to the 21 again. Up until then, I don't chase it. Usually, higher rates, markets like it, especially banks. So, but now it's not so clear. But I still have to point it out. Oil is a rigged market, right? So I would want to pay attention how I would want to chase it. So this is oil right here today. What's with that? Well, let me zoom out. Skirmishes in Yemen, oil spikes into 42.48. Just minutes later, it's $2.50 lower. It still closed higher, up 4%, but why lose this level? Why? Let me show you why. Maybe this one. Nope, not enough. I got to go out to 20 days. Look at this. Right? That's a rounding bottom kind of, except for a cratering. So it is a level from which it's fallen before, and here's 180 days, so you can see it needs to hold and break this level to recover this area right there. So you want to go long oil. It's a rigged market. It's beyond my pay grade. I'm not one to do that. All right, I have a whole bunch of stocks to cover, and let me see if I can bring them in here, okay? Hold on for a second. Okay, there we go. Microsoft. Today, big red candle. Somebody said they took puts in it, $42 puts. They're in the money now in a good way, right? So now it comes into, all right, with Microsoft, what do I do with it now? I can't chase it. I can't catch this falling knife. This is head and shoulder-ish in nature. It's not an exact head and shoulder because probably this break right there. But I've got a lot of, like, see this red line right there? The thin red line. If it loses 40.50, this can come pretty quickly. And if it loses this area right there, this can come pretty quickly, even though it has lost it before, but it's bounced. So too many if that just don't make me want to chase it. It's like doomed to be in the 30s, this stock, I kid you not. Okay, Skyworks, also somebody asked me about Skyworks. Skyworks Solutions, I think they're called. I said this candle today is important, and look at that. They closed slightly below that green line. Incredible, incredible. They're saying maybe it's going to bounce now. I say give me a thesis why it should bounce now, then I'll go behind it. Otherwise, it could go lower. If it loses this green line and the markets sell off, that's a lot of ifs, right? But it could happen. And this can come down here easy. Look at how much gain it had so quickly, right? So I don't want to catch a falling knife. I know nothing about it. I don't know why it ran up all the way to $102. If I'm dying, if I know about it, I'll buy a debit call spread, but nothing more. I would not do a credit put spread in it, and I would not go long it via stock big time with a lot of money on the line. Okay, another request or a stock that a few members watch. This is one that came from Jake. It's NVAX, Novavax. I don't know the fundamentals, but Jake had recommended it on its way up, and we had, some of us jumped on board just blindly via calls, cheap calls, and they paid several times. But recently, I think they've had offerings, and which dilutes the stock, which is bad for the stock price, and also people start to think, why do you need the money, right? So look at that, fall off a cliff, gaps down to 8, followed up by a nastier candle. So I had drawn this before I saw the size of this candle. But so this break brings this trend into line, and then when we lost this one, now we have this trend in the line, and it better hold 7, or it might have lower to go. I'm not sure. But if you know the stock and you know long term it's going to be fine, calls would probably pay. And with this stock, I would usually buy calls at the money because they don't price well unless they hit the money line, meaning I'd spend a few extra bucks to buy the calls at the money. And if the stock recovers, then you're immediately getting paid fast. But these are lotto styles, small money. I don't want to risk a lot, okay? Priceline. Priceline still fighting this green box of mine. This and this were rejected. It's fighting for its life right here. I still think that 1130 might be in the cards because of this open gap. Markets love to close open gaps. So let's see if they do it. And if it loses this area here, will this come into play? If it comes down here, I'll go through credit put spreads in it, and I'll share them with you. At this point in time, I'm not rushed to trade it. Look at this drop. It was right here. We had a couple of dojis. I don't know, and then whoa, all the way down. So it can go lower, even though it's a great stock. I don't know of any issues, but it's tied to Europe, so it should do okay. However, I'm not in a rush. If market's correct, this one would run down fast. It can lose $100 in one day. It can gain $100 in one day. Okay. It has done it just 2 times in the last 6 months at least. All right, that's Priceline GoPro. What a casino. Just today opens up $44, so it's up like 6% or something, 5%, down to 41. That's almost flat, up 0.4%. And then actually that yesterday, right? And then up this morning, up, and then down, and then I think it closed up 2%. So it's up right here somewhere. What? That's a casino. It's not for me. Okay. Somebody asked about Gilead. Is it time to catch Gilead? I don't know why. That's, you know, the only place people agree on being a bubble, and then people don't use the word bubble. Oh, there's a definite bubble, except in the biotech. And this sector is the only bubble that the media experts admit to. And why would I want to catch this candle? That's a bad candle. It's a good level. That box right there, I should extend it, but it's a bad candle. If we lose this box, this is the next logical box. They came up too fast. Yes, they consolidated up here for a while, but this is all transitional, so there's no support below here. So if they lose here, who knows where it stops, right? In fact, I shorted Biogen IDEC, made some money, got out too soon, and I told you about it, but you know, it was a lottery ticket. I'm not going to cry over green. I would cry if I had lost money, but anyway. Somebody said, what about the transport? Is it time to short or long? I'm not sure. Look at this. An important level is right there, right? It was resistance, failed, got to it, busted through it, used it as support, springboard, 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 kiss. What next? If it loses this, this is where it goes. Easy. Okay? So this is a consolidated area. This is a consolidated area. This is a transitional area. So there's a big chasm here that scares me. I'm not in a rush. And if oil is as low as it goes and it's going to go up from here, doesn't that go against the transports? Because anyway, that's instinct. I don't know for a fact. Amazon. Amazon, it's the short idea for a lottery ticket in Amazon is as easy as 1, 2, 3. I love it. So this is a level where it had, you know, incredible rise on earnings. Look at that gap, meaning this is where it closed. The next morning it opened here. It did not trade this zone. Opened here, big candle, big candle, big candle, big candle to all-time high. And I said short it here, but maybe it wants to go there, and look at that, it goes there. But even if you shorted it here, I said over 415. Somebody asked if you can short it. I said sure, but I want to be above 415 or 410, I forget. It would have survived. And it came and kissed the bubble that I had drawn here at that day, and then fell apart. Okay, but now bounced, bounced, bounced on that same level that used to be resistance, now support, support, kiss today. So lose 365. These candles will go away fast. Chutes and ladders. Ladders on the way up, chutes on the way down. So this is a fast track to this too. So 1, lose 365 will get you down to here possibly. Lose 2, when you get here, you're going to be sucked by the people that wants to fill the gap. So lose 2 will get you to 3 real quick. And from there, maybe you start going long it. I'm not sure. But all this could be saved by markets that rally from here. However, what will make the markets rally? And I'll go to that in a second. Okay, remind me. You can't, but I will remind myself. So it will need a positive catalyst. Headlines could come, who knows. But from here, a lottery short via debit put spread, meaning I buy a put or put spread, I can gain. Lulu, oh my gosh. Great day for Lulu today on earnings, right? And following a couple of bad days before. However, now this looks like Apple when it fell out of 700. 700, boom, 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 and then did a rounding bottom, climbed all the way up, and then did a couple of cup and handles inside of each other. This is a cup and handle. Look, cup and handle. Not exactly correct because of where it started. It would have been ideal if it started from here, and this would have been the neckline, but it's bullish enough for me. Inverse head and shoulders, you know, shoulder, head, shoulder. They both point to a possible target up here. So that's a lot more upside from 67 or 65. But this level is resistance from the green to here. So if it fails, and look at the candle today, was not able to close above my green line, although it's not a scientific line. Why didn't it close on the highs? That I'm asking myself, right? How much oomph do they have? I don't know exactly where it closed at the end of the day, but I'm going to assume somewhere here. I took the snapshot earlier, so you know, verify before you chase the logic there, okay? And is this resistance? If it is it going to wish it down again? All right. So these are questions I ask myself. Okay, I just checked, and Lulu closed at just under $64. So this is $65.85. It closed here. So it's worse than I thought. It's not terrible, but it's worse than I thought. All right, enough spent on Lulu. The SPY. Okay, somebody said. Remember, somebody said, was there a fake trade in the SPY overnight? No. This right here, that was after the close last night. That's not a fake trade. Why not? Because if you look back here, in the morning, that's where we were traded. So a couple of guys or girls or a couple of people got together in the morning and they did a deal on the SPY. I'm selling this. Are you buying? Yep, I'll buy them. What's the price? $208.95, which is about that price right there. All right, done deal. They didn't settle it until the end of the day. Had you seen this and nothing up here the day before, then it'd be wishy-washy, kind of like that Apple one I shared with you before, or kind of like the infamous one that from the SPY. I think this is right here. Okay, months ago, look at that print, $213 almost from the S&P. And no, I've addressed it. What was that? Nobody said anything. And we meandered weeks and weeks and weeks. This is 188 days, 180 days. We meandered. Nobody talks. I kept asking, what about that? Nobody said anything. And look at this. It's like the market maker said, okay, let's show them where it's going to go. Oh, sorry, too soon. And then they got us there. Similar situation happened a couple of days ago with Apple. I told you yesterday the 125 level was a preview before the open. There was no 125 before that. All right. So these are this is what I had notes on for today to share with you. I did a video as a lesson. Everybody should watch it. Thanks for hanging. The recap was just like 8 minutes, and the rest was just going through these stocks.